Thank you, Bruce, and thank you for agreeing to do this. And it is my sheer pleasure and privilege to welcome you to the Digital NSR Summit. And whenever I've interacted with you, it's really been very beautiful and intellectually curious. I think I would like to begin from the beginning, from an investor AI perspective. Sort of, we have had so much discussion around technology. If you can sort of begin by talking about what technologies are you bringing together in investor AI? What really are those?
So I'm going to start by doing what the last panel did and not answer your question. So firstly, today is International MSME Day. You and I spoke about this before. So much is about MSMEs, and I think it's just worth celebrating that. So I want to just celebrate
Thank
that.
you. Thank you. Yeah.
In terms of tech, we build our own AI foundational models. So I know that last panel, and they've all kind of run out, which is a shame because I was hoping to kind of catch them. They're talking about building, not even the houses, they're talking about building something on top of that. We build our own roads. So in your example, we're a little metro that's kind of running round, and we build our own servers. So I get purchase orders through from my tech guys because they're a way to build their own servers, and they're building their own foundational models, and they're building all the tech on top of that. So what we've got is I think we're one of the few foundation businesses with its own foundational models in an Indian context. And I actually really loved the end of that last conversation when we were talking about education and talking about how you involve academia. And I think that for me is a really important bit. So, 5 trillion, great, but how do we go beyond that? And how do we go beyond being a service economy? And part of that is IP. And you get to IP through foundational models. You get to those sort of things through how we start to bring academia in. And I'm going to just go another just slight aside. My head of lab said to me last week, he said, "Are you a maths guy or a physics guy?" Right? Now, I wasn't quite sure how to answer that question. So, 50-50, flipped a coin. I said I was a physics guy. That's fine. Okay. So he's suddenly decided that in the noise around the models that we've got, there's some more nuggets. And he's going to use some quantum engineering techniques to kind of pull them out. And he wants to go and hire a PhD in physics to study wave technology to figure out how we crack this particular nugget. And we're actually looking at people in the US to bring them back to India rather than just looking for... So what we're having to do is kind of go outside to find people that have spent time doing some of this stuff that we can bring back in.
Interesting. When building your foundational models, and I want to understand one thing. I happened to interview a mutual fund out of India, which is also AI powered. And they said that their product team is like just 5 people. From an investor AI perspective, I want to understand how much of it is consumer facing? Who are your clients?
So today our clients are regular investors. So what we're trying to do is AI's been in the investment industry for decades. When I was private equity back in the 90s, it wasn't around then, but it was certainly early 2000s. I was in the kind of hedge space, and within the hedge fund space in the US, AI, not in its current format, but in the kind of symbolic kind of rules and reasoning format, it's been around since then. And Jane Street, that's exactly what they're doing. That's what they're doing in our markets just now. So AI's been around. The view we took was, how do we get AI into the hands of the individual? So I think you talked before about disruption being the overused expression. I think the other one is democratization.
I know.
And we unashamedly are trying to democratize the use of AI in investing.
So I can actually go onto the Investor AI app and I can invest? Is it like the grow for me?
No. So we took, again, this is partly a kind of finance thing. Someone asked a question about financing earlier. We took a view early on about how much funding we thought we could raise and how much equity we would give away at that point in time. And we decided that the kind of smart route for us to market was B2B2C. So you won't find my app, But if you're in HDFC or you're in Yes or you're in GeoJit or you're in IFL or you're in Upsox, you're in 5Peso, any of these places, our stuff sits in there. So, and it's quite often not branded. So if you're in JM Financial and you see Equity Ninja, that's our stuff, right? So it's in there and working away behind the scenes.
That's fascinating. So basically, your model is being used by financial institutions to power their investment platforms.
So it's got our name on it eventually when you get in. But yes, essentially they are offering model portfolios to clients that are being run by AI.
Okay. So essentially, HDFC is using InvestorAi model to provide investment solutions to retailers.
Correct.
Fantastic. So how many such clients do you have?
We currently have about 20,000. So in an Indian context, that's tiny. But, when I think last year we were sitting on 10,000, our revenue run rate, so our revenue last year was 20 crore. Our revenue run rate today, so last year just finished, 3 months ago, our revenue run rate today is 60. We think we're going to hit 100 this year. We're going to grow 5x in that year. And on the kind of agentic piece, we think we'll add 5 people, right?
Five people in the product team.
5 people in the entire business, right? I think we can grow our business 5x or grow by 4x, so 5x in total. So 400%, 500%, and we're going to add 5 people.
Wow.
And that 5 people equates to 10%. So that the agentic discussion that was happening earlier, agentic can do that behind the scenes. So all of our output for our clients is our foundational models. All the agentic piece is on LLMs. We don't build it. We don't need to go and build it. You use LLMs for that. So we use different LLMs across the agentic piece. But we've started already rolling out. We're through the POC phase. We're actually rolling out a bunch of different agents across the business.
That's fascinating. But tell me one thing, if you are catering to an HDFC, so can you still get in ICICI on your clientele?
They're on the list. I haven't got them yet. If any of them are here, they can come and see me afterwards.
Yeah, so I just wanted to understand one thing. So basically, with agentic, you're saying you can actually build 100 crore company on back of 5 people with agentic AI.
5 incremental. I've got 45, so I'm adding 5.
So just adding more 5 people. Yeah. But your ambition run rate is like 5x of your revenue.
Yeah, absolutely.
How do you explain agentic AI to somebody who doesn't really understand that?
So kind of part one's automation, right? And automation's been around forever. And, actually, so you were talking about Bangalore earlier. So much of Bangalore was built on ITO and BPO. So, we've talked about emphasis 2 or 3 times. So, if I think about a classic kind of BPO use case, we would go and take a business and we'd break the processes down and we'd break them down and we'd break them down until we got them into different things. And then you would offshore certain bits, you would keep certain bits, but you would break it down and then you would try and automate parts of it. But the automation works on a rules basis. And what it doesn't understand is context. And what the LLMs have done is they've allowed the machines to actually understand the context. So suddenly when it understands the context of what's going on and what it's being asked, it can do so much more. So, whether it's writing a report, but it's not just writing the report, it's then depending on what outcome comes from that, figuring out what else it should go and do. So there's a whole kind of orchestration piece that surrounds that. And what that means is, it's not just, historically, you automated one thing. If the error message came out of that, you couldn't move to the next stage. The whole process broke down. Actually, agents can deal with what would have been the error message, figure out what the right answer is out of 2 or 3 options, and then move on.
So I want to understand one thing from you, Bruce. So you are still B2B. You are catering to these business.
B2B2C.
Yes. So how do you look at a company like Grow, for instance? Like an investment platform. Literally, I think it's a habit-forming product. Like the way we have Paytm, we have Zomato, we have Uber. I think a lot of us also have Grow on our mobile platforms.
Look, I think Grow, I think, Upstocks, I think all of the digital brokers that came in, they've done a brilliant job. We're talking about kind of DPI earlier, but I think there's other segments that we can look at, and I think if you look at the kind of brokerage segment, all of those companies have come in, they've made it really easy for anyone to kind of access markets. And you and I spoke about this once before, but when I was a young man, to access markets, you had to have a pinstripe suit, you had to come from the right family, you had to have the right amount of money. So it's suddenly been really easy to democratize, to use that word, to democratize markets for people. So I think all of those players have done an absolutely fabulous job. And the thing that they do better than anyone else is they make it frictionless and really, really easy to use. And I think that's where the traditional players have probably struggled, because they've tried to take an existing process and sort of rebundle it up and probably offer too many things. Whereas it's just a much cleaner and easier to use thing. And you're right, it's habit forming.
It is habit forming, absolutely, and it's delightful. So you would not want to get into a very consumer facing kind of a strategy?
We might, but not this year.
Okay, we might.
I said, let me like throw some secrets out there. So gold, right? India loves gold. So I spoke to my head of labs and I said, can you go and build me a gold model? And he kind of looked at me and he went, oh, that's so boring. I went, no, really, there's a big market for that. So he went away and he came back and he went, I'm finished. Okay. I said, so can we test it? So he linked it up to Zeroda and he put 2 lakhs of his own money in. 6 weeks later, it was worth 4.6 lakhs because every day it was just trading and it was taking a forward position. It was one trade a day. It was just making one trade a day that he had to sort of sign off on. And in the space of 6 weeks, it had doubled and some. So I think there's 2 or 3 things like that we've got that I think in due course will be kind of retail ready.
Interesting. So what I'm understanding with success like yours and say Grow and other platforms, for instance, is that the future of investment platforms is going to be very, very artificial intelligence driven. Like this is a large mutual fund I'm talking about, and they only have 5 people in their product team. And you compare it to a mutual fund like a Parik mutual fund in India. Now that sells because there's a brand name. People understand that name. They have trust in that name. And here I am trusting a screen, an AI, an agent. But don't you think the mentality is that I would rather trust my money with a human than an AI?
So you say that, but Gen Z doesn't believe that. So as we think about the next generation coming through, my kids wouldn't go and Google. They wouldn't think of going to Google something because they go straight to ChatGPT. So there's a sense from the next generation coming through that they will just automatically go to a GPT type option rather than kind of going to Google. So I know what you mean. There's a generation of us that might be used to that, but I think more and more people are coming through. I also think the quality of human advice that we sometimes get is limited on what that individual's got in front of them. Now, you can make that individual better and stronger using tech, but you're kind of reliant on that, and all the biases that exist, you're reliant on that individual. So I think there's flaws in the kind of human version of it as well. But to your point about brand, we're B2B2C because no one knows our brand. Everyone knows HDFC. Everyone knows Yes Securities or IFL or all of those are well trusted brands. So for me to sell my product through one of those guys just felt like a kind of really easy thing to do to help kind of grow and scale my business.
But why be B2B and why be in shadows if you're powering their product and not just come out in the open, raise like a huge round of funding, like a Series C funding, and do that?
We've just done Series A, so give us a bit of time.
So keeping it in wraps.
Look, you would never stick with just a B2B business. You're going to kind of build more things off of that. We're currently running pilots with 2 US hedge funds. And they approached us and said, "We love what you're doing with B2B2C. Can you help us?" So we're running a strategy for each of those 2 hedge funds on US equity long short. If that takes off, we'll be doing stuff with more domestic funds in India, and that looks like it's beyond 50% in terms of takeoff. And retail's another obvious place to go as well. So I think we'll be going down that route. But I guess at the heart, for us, you've got a human advisor. That's fine, but AI gives you something different. And you and I have talked about this, but the AI that we use looks at several trillion data points every single day. Actually, all of us together here couldn't do that. Now, it's like the idiot savant. So it knows something really, really, really deep. It's not good at making decisions on small amounts of information, and that's where humans really kind of win the thing. As a human being, you make decisions all the time. You make snap decisions all the time based on very little. Machines are rubbish at that, but we can't deal with all the data.
That's very, very interesting. I mean, you spoke about the fact that incrementally adding 5 people, but revenue going 4 times, 200 crores. And if more and more mutual funds and the finance industry becomes AI-driven, Bruce, so how will be one different from the other? I mean, is it like the crux will be on the data audit? The data that you feed in will be differentiating, say, a DSP mutual fund from a Bandhan mutual fund. How will they distinguish?
So as a different question, I'm going to answer a different question again. That seems to be my theme today. So the different question is, so not on your regular GPT or what you're using, but go into one of the LLMs and ask it to pick you a random number between 0 and 50. Okay? Apart from Grok, they'll all give you the same number. So on differentiates, I think it's 37. It's 37 or 27. I can't remember. It's one of the 2, right? Just go in and do it. Don't do it on one that you use, because that will have all of your learnings on it. Go into a new one. Go into one that or clear your history. Just ask it. Random number between 0 and, I think it's 0 and 50. It could be 0 and 100. 0 and 50. It'll give you the same number, and they'll all give you the same number. And it's because they're all trained on fundamentally the same data and same kind of human biases that kind of come from that. So I think if you build your model just on LLM, it is difficult to differentiate. Someone, if you've done one, what did you get? 39. Oh. Right, okay. Try it on the next one, see if you get the same number. But there's a how do you differentiate? If you're going to use the same LLMs, you're going to end up with similar-ish answers. And I accept the point, it's different at different points in time, but in terms of running an industrial process about your business. So I think you've got to find the thing that is different for you. As I say, we've built our own models, and the learning that comes from that gives us, we think, an edge. Other people will do something similar.
So, I mean, it's like simple. I mean, if you want a different output, you need to have a different input. That's how the law of energy works.
Or a different way of translating it. So what you apply it to. So can I spend a few seconds? Please. I find this fascinating. You may or may not, but just kind of bear with me. The tech we uses computer vision technology. So one of my guys looked at a paper from the US, which was all about how IBM were trying to help find cures for cancer, in essence. And kind of off the back of that, they did lots and lots of kind of CAT scans, and they kind of put them through, and they used computer vision tech to kind of really help sort of make that work. So what we do is we take financial data and we turn it into an image. So every data point is a pixel on the image. And then we show the machine lots of images. So the machine starts to sort of pick pictures from the image. Each image has either 1,024 or 3,072 pixels, number of data points. And there's an image for at least every day for every stock for the last kind of 12 years. So that's fine. But actually, what the machine also does is when it's looking at, if it looks at an image of a cat versus a dog, it's not just the spiky ears, floppy ears, nose, it's the kind of distance between them. So if the head turns, it can still recognize the difference between a cat and a dog. So for financial data, where you put the stuff on the image matters. The relationship between points matters. The illumination of things within the image matters. So it's not just having the same data, it's kind of how you map it and plot it out, and then how you kind of crunch it off the back of that. You will end up, we currently have live 40,000 different model portfolios. We don't have them all live, but they're in the library. We've got about 20 running, and they all produce slightly different results every day.
So Bruce, I want to understand one thing from you, that if increasingly everything is going to be so much technology driven, and you said that incremental 5 people, but that translates into revenue of about 100%. So now a lot of other funds will be inclined to do that. So that means that we'll be hiring more and more agentic AI workforce, people who understand agentic AI, and maybe let go of a lot of redundant people. Is that what the workforce will be?
Look, I think the workforce one's really interesting. You know, my kids are early 20s, so they're going through this just now, and kind of what does it mean? And it's really easy to get into. So my son's finance and economics. He finished his course. He did a kind of a remote course in Python. So he learnt Python over, I don't know, a few weeks. He's currently working for a wealth manager in London. And they're spending 2 lakhs every time they have to run a particular report. And he thought, I can build that. So he kind of dusted down his Python. He used ChatGPT, the free version. And over the weekend, he went and built all the tech that runs this report. So he went to see his boss on Monday and said, you know that 2 lakhs you spend every time you want one, I've built this now.
So
But
yeah.
the point is, it's easy to get into. That job's now gone. Right, so the entry level is easy, and the entry level is actually going to eat the entry level. So the point before about kind of domain expertise and where that sits is important. And I think the thing that we've got to do for all of our kids is how do you get them that career path? Because everyone that came into tech 10 years ago, whether it was IBM or whether it was Infi or TCS, or there was a kind of well-trodden path that people went on. What's happening now is you leave IIT and some big bank offers you an awful lot of money to come and be part, or mutual fund house to come and be part of that, and you go and do that. You're no longer part of this thing where you learn and train and all the rest of it. You automate something and then you're kind of gone. So I think it's going to be getting kids on that career path, and that learning piece is really important.
So Bruce, I want to sort of get you into the advisory position now, since you are really advising so many companies and building this agentic AI and investment-powered solutions to them, and now you also are getting into agentic AI. India has a lot of these banks, and these are formidable institutions, and we have a lot of reverence for the banks. It's like very ably controlled by RBI. What can banks do better in terms of agentic AI?
I can't believe you just asked me, what can banks do better? Seriously, I could give you so many bad banking stories. So on the basis there might be some in the audience, I won't name names. You know, that look. Oh, no. So we don't help people with agentic AI. We just use it ourselves. You know, frankly, anyone that's got a process that can be automated can use agentic AI for that. So I think all the banks can do that. An interesting anecdote from Europe. So my chairman is also the chairman of Bank of Ireland. And one of the things that the EU is doing just now is they're forcing you to pull all of your customer data into a single place so that you can see everything about everyone at any point in time. If you're a bank that's been around 200-300 years, that's a nightmare because you've got lots of systems. Frankly, if you've been around 50 years, you've got lots of systems. But what agentic AI is allowing them to do is to go in and pull from all the different systems of all the subsidiaries everything they need and stick it in one place. So what would have been probably a 3-year project to do something the regulator wants is probably now a 3-month project.
What can mutual funds do when it comes to agentic AI?
Work with us. No. So it's interesting. I've met lots of mutual funds. I think everyone in India is struggling with how they they do that. So what happens is they'll use a bit of AI to figure out some sentiment score. So the sentiment score will be based on, going to social media and getting some, sense of what's going on, or they'll use it to help on research to kind of plow through news media and get something from that. So those are the kind of things that are doing. Honestly, that is seriously low level. Seriously low level. There's so much more that could be done in terms of helping find those opportunities. And if I look at the US, I'll get my numbers slightly wrong, but share of mutual funds in the US just split between active, passive, and I'm going to use quant as a kind of substitute for AI for the purposes of this. Quant in the US is something in the region of 30-odd%. Active is something in the region of 48, 50%, and then, passive, and then active is the remaining 20. If I look at an India context, passive is about 20. The rest's active. Quant is next to zero. And the last time the US was there was, I think, 85 or 83. So kind of the mutual fund industry's, I think, got a long way to go. If we take the US as a kind of example of where to get to, it's got a long way to go in terms of adopting tech, and that will bring down cost. I think the amount we pay for funds is far too much.
Interesting. So it spoke about bank, we spoke about mutual fund. How about payment companies?
I don't know enough about them.
Okay. Do we have any question for Bruce as yet?
I wanted to understand what can we expect as almost like a before and after, that a mutual fund, say for example, adopts, your services, and I'll nuance that question saying a lot of the quant funds, the hedge funds, used a lot of short-term trading. They used a lot of quick-time data, right? That was in fact the genesis of how Wall Street was, the speed and distance. But most mutual funds are more long only, that's how retail investors come in, which is very financial data driven. As she very correctly pointed out, is going to be the quality of the audit data. So what can we as retail investors expect in change in the research reports, or what's going to happen with the communication from the funds because they've used products like yours?
So the capital markets today, people are using AI and ML to make trades. One of the reasons that retail investors, only 10% of retail investors make money on whether it's derivatives or intraday, is because there's so many big institutions using tech on the other side of that. So what we should be doing is trying to kind of balance the field a little. You'll never completely balance it, because they'll always have more money and they'll always have kind of more speed. But to your kind of fund point, do you actually know what's in any of the funds you hold? No. You know at the month end, but you don't know what they do in between time. But you trust them. They're the stewards of your capital. So there's certain rules that you expect them to kind of abide by. Those rules shouldn't change, and the kind of monitoring of that shouldn't change. But if the fund manager can make a better research decision on an investment call, then that's surely a good thing. If one of the stocks in the portfolio is going down and he or she wants to churn out of it, but he hasn't thought what the next thing is, guess what? AI never sleeps. So there will be something else there. So your ability to use it to improve your research, improve your stock picking is kind of absolutely there. But the point that was made before, you still need some kind of human oversight on top. I think someone mentioned the recent SEBI paper. I was a little disappointed in that, because the SEBI paper talked to, what banks do, and it talked to, customer service, and it talked about a lot. It didn't talk about investment. It didn't actually talk about investment and how AI is being used in the kind of investment industry. And I think it's because everyone's kind of a bit scared on how they kind of use it just now. So we've got to get the kind of guardrails around that right. But if that fund that you're invested in ends up running a bunch of short-term trades and it makes you money, you don't care. If it blows up, you do. So it's about the rules.
I wanted to ask you something, that if I were to start a fintech company powered by AI in 2025 and to learn from your journey, what do you think are the 2 or 3 mistakes that I should not be doing? How would you be doing it differently now with agentic AI coming in?
I don't think agentic AI changes a lot of what I would have done differently. I would do a lot of things differently. I think where agentic AI really works is once you've figured out what you want to do, it really changes your speed of execution and your ability to execute with less mistakes. So I think it does that. So I don't think agentic would kind of change things. You know, all the things that I would do differently are all about, you know, when you think you've got product market fit, you don't. You never do. It takes 3 or 4 iterations to find it. So you end up with a few of those pivots. I think, if I think of my own journey, resilience is probably the biggest single thing. And that is just such a human characteristic. You know, when things are tough, you're down, all of a sudden all your customers have disappeared because COVID's come. How you kind of deal with that, whether you've got AI agents or otherwise, doesn't help you. Kind of what you do as kind of humans is kind of what comes to the fore. On that earlier panel, I love the fact that they only invest in people over 40. As a 55-year-old, I was really quite happy with that.
Okay, they only invest in 40. Okay. There are companies like Grow, for instance, Upstocks, for instance. What can potentially disrupt them? It's large consumer-facing companies.
So whilst they've done a brilliant job kind of democratizing, and what I think they're all very good at is they're all very good at execution. So if you go on and you know what you want, they're absolutely brilliant at it. I think if I think about that market generally, there's an education, there's an exploration, there's execution done well, and then afterwards kind of explanation. So those would be the kind of 4 E's of that journey. I don't think any of them do a brilliant job on educate and explore. And they do an okay job on explain in terms of what happened afterwards. So I think there's a piece around that in terms of, if I take the baskets that we've got, how do I tell you or explain to you that you've got a better chance of success, but you still might lose your money, right? There's all of those things. You've got to have a way of kind of doing that. So that whole journey and how that's working, and when I'm in Bangalore and I talk to some of the VCs there's quite a lot of interest going into how those parts of the journey are being dealt with.
Okay. My last question to you before I sort of throw it open to the people here is that I would like sort of put you on the VC hot seat right now. And if you were to do reverse pitch, and if you were to talk about 2 ideas in the finance space or otherwise using AI, which you have not seen, what would those be? Like, there are all these hungry, enthusiastic entrepreneurs in the room and would love to know about ideas from you.
The best ideas are always the simplest ones, aren't they? I think one of the most beautiful apps that I've ever seen came from Sweden. I think it's called Get Dreams. You've got to be careful because if you type in Swedish dreams into the internet, you will get the wrong answer. But I think it's Get Dreams. And what it did, and it was aimed, it's a few years ago now, but it was aimed at young people and how you save together, save for a holiday, save for a wedding, save for a car, save for whatever it is. But the way they did it, and it connected to your bank account, it gave you prompts on you're spending too much money in coffee and have you tried doing this? So it did all of that stuff, but it also, you could save as a group. So you could see how others were doing it. And they just did a really good job of taking something simple and kind of making it work. So, there's now lots of variants of that around the place. I think, if I think about my kids, my son different because he did economics, but if I think of my daughter, she wants to be able to invest. She sees why she should, but she doesn't really know what to do. I think there's a whole piece about how we help young people do that, and that's what will make them more independent and give them that sort of second income stream and make a massive difference because, compounding is the 7th, 8th, 9th wonder of the world. The earlier you start, what a massive difference it makes.
Fantastic. So maybe we can sort of look on that up. Okay. Now it's time for rapid fire. And you have to tell me, where do you eat bhel puri in India?
I would actually I would get Swiggy to get it in for me.
Okay. Which has been the most, like the highest point of your career till now?
You know, this is gonna sound really rubbish, but every day gets better and better. You know, I'm absolutely loving it. We built a last business, we kind of exited that. We sort of started this one, we're kind of doing it again. So the fun bit about starting businesses is just kind of growing and growing it. When it gets to a point where it kind of plateaus for me personally, then it's my time to kind of step away. So it's kind of where I am today.
The most overhyped entrepreneur in India right now?
I'm not going to comment on that.
Okay. I think with that, can we just hear it up for Bruce for sort of opening up on his journey and what he's building and what really his plans are? Okay. Any questions from the audience? I'm going to just wrap up and get to Vishal's session.
Agentic stuff and see it live in action. I think it's aligned with the vertical AI POV that I was sharing earlier. I think you're trying to build a vertically aligned AI company with the entire tech stack replaced by AI. So would be great to hear what's next on your agenda. What does this roadmap look like?
So we pitched to VCs in 2019 vertical AI, and everyone just looked at us and went, "What's that?" So I'm really glad that vertical AI has come back, and we can probably dust down that old website and kind of put it back up again. So for us, there's kind of a couple of things happening. One is, so everything's obviously investment focused. So one is, as I said, we started doing some work with a couple of US hedge funds. So our ability to use the same foundational models, but using data from different markets, so it allows us to sort of go into different markets. So I think that's kind of a sort of an obvious and easy sort of step to go. You know, you touched on retail. You know, at some point we'll end up on that journey, whether it's with this gold product or something similar. It'll be different to what we have, but it'll be more kind of asset class adding on. I think there's a really, really interesting opportunity with the Indian diaspora around the world, because this is a fantastic place to be and a fantastic market to be in. And from an India market perspective, just for demographics, you know, we're looking at 20, 30 years of bull run. It's not going to be a straight line. It's going to be bumpy, but bull run. And there's so many people want to invest in here, and it's really difficult to do. And I know there's Gift City and these things. I actually think there's a really interesting play to be had on how we use tech and how we use AI to create some really interesting portfolios for that group to be able to kind of come back in and participate in this market and kind of benefit from that.
Very, very interesting. Just a follow-up question on what are the commercialization models you're running in your mind with this new advent of technology, particularly on the agentic side? What are the different options you're running in your mind? So
the agentic side is just for our internal processes. So there's, you know,
you don't plan to kind of commercialize that out to?
No, we just do that ourselves. So that's fine. But the where we make money is by making good portfolios, good investment baskets available for people. That's kind of at the center of what we do.
More on outcome-based pricing model.
If you're in the investment space and you don't think about outcomes, I think you're thinking about the wrong stuff. Because fundamentally, we all put our own cash into, whether it's that mutual fund or whatever it is, we want to know it's worth more. So unless you focus on outcomes, you're not going to have customers for long.
Thanks, Bruce. Makes sense.